It's time to talk business stories now. Amidst persistently elevated inflation, limited fiscal space, upcoming general elections, and various economic occurrences, analysts are now predicting a high interest rate this year. In a report, the analysts forecast that Nigeria's gross domestic product growth for the year would soar around 3 to 3.5%. The report also captures that foreign portfolio investors would continue to withdraw and divest from Nigeria pending the direction of a new government. However, the experts also want the Central Bank of Nigeria, that's the Apex Bank, to look into tightening policies to bring down inflation and stabilize the currency by raising the returns for holding Naira. The Food and Agricultural Organization has revealed that world food prices dropped in December 2022 by 1.9%. From the previous month. The food price index averaged 132.4 points in December, was 1.0% below its value a year earlier, which is 14.3% higher than the average value over 2021. The FAO chief economist, Mr. Maximo Torero, says there is need to keep a strong focus on alleviating global food insecurity, given that world food prices remain at elevated levels, with many staples near record highs. In the meantime, according to the CBN financial data, deposit money banks borrowed the sum of 21.87 trillion naira from the Central Bank of Nigeria via the standing lending facility window and repurchase lending platforms in 2020. This represents a 260% increase when compared to the 5.744 trillion naira recorded via the same windows in 2022, while the borrowing, however, represents a 19.3% decrease when compared to the 27.08 trillion naira the banks borrowed from the Apex Bank in 2021. The Apex Bank has two short-term lending windows for banks and merchant banks, namely standing lending facility and repurchase repo lending. The financial data by the CBN revealed that borrowing by banks and merchant banks through the SFL in 2022 dropped by 14.25% to 11.15 trillion naira against 13.01 trillion naira in 2021. Away from the financial sector, the value of non-oil exports to other parts of the world has hit an all-time high of $4.82 billion in 2022. This is 39.91% above the figures in 2021, and the Nigerian Exports Promotion Council is positive it will exceed the figures this year by at least 30%. Our business correspondent in the nation's capital, Lara Falayo, tells us more.
214 commodities consisting manufactured, semi-processed, solid minerals and raw agricultural products were exported out of Nigeria in 2022. The commodities were exported to 122 countries, with Brazil being the highest export destination, with 12.27% of total volume of exports. Urea and fertilizer were most exported, largely due to the Russia-Ukraine war, which shifted more global demand to Nigeria. December saw the most exports valued at 10.37%.
It is cheering to note that despite the harsh economic environment precipitated by the effect of COVID-19 and global economic recession, the sector recorded a significant and highly impressive result with a non-oil export earnings of $4.820 billion recorded for the year under review. This represented an increase of 9.91% over 2021.
Unfortunately, no ECOWAS nation made it to the top export destinations for Nigerian non-oil commodities. The Nigerian Export Promotion Council is, however, hopeful its establishment of the export warehouse in Lome will help facilitate this process, as the high rate of informal activities is a limiting factor in the region. The NEPC is positive the increase in export value seen last year will be up by at least 30% this year. It hopes to attain this feat through its various export promotion programs aimed at bringing more players into the export net.
The NEPC is presently facilitating SMEs acquisition of international certification in order to access niche market with premium pricing under its Go Global Gold Certification Initiative. The program is aimed at promoting the export of quality products from Nigeria, thereby reducing the incidences of product reject in the international market.
The NEPC advises young people to take advantage of the expanding opportunities in the non-oil export business and stop seeking greener pastures abroad. 375 billion was approved by the Federal Executive Council last year to clear the backlog of claims for 285 beneficiaries of the NEPC's Export Expansion Grant Scheme. The NEPC says none of the beneficiaries has received the grant as the processing has yet to be completed. Lara Folayo, TVC News, Abuja.
Well, let's turn to global markets now as Asian shares firmed today as optimism about China's reopening offset concerns that the Bank of Japan might temper the supersized stimulus policy at a pivotal meeting this week, while a holiday in U.S. markets made for thin trading. Japan's Nikkei slipped at 1.3% at a two-week low, while MSCI's Products Index of Asia-Pacific shares outside Japan added at 0.9%, with hopes for a speedy Chinese reopening giving it a gain of 4.2% last week. And China's blue chips extended their rally with a rise of 2.0%, while the yuan reached its highest since July. Euro Stoxx 50 futures added at 0.6%, while FTSE futures put on 0.1%. S&P 500 futures and Nasdaq futures edged up at 0.1% after a Wall Street bounce last week. Away from global markets, in its latest report, the International Monetary Fund, as the IMF, is warning that severe fragmentation of the global economy after decades of increasing economic integration could reduce global economic output by up to 7%, although it noted that the losses could reach 8 to 12% in some countries if technology is also separated, while explaining further that limited fragmentation could shave 0.2% off the global gross domestic product. The IMF is insisting that there is need for more work to assess the estimated cost to the international monetary system and the global financial safety net. However, the report notes that the global flows of goods and capital had leveled off after the global financial crisis of 2008 and 2009 and a surge in trade restrictions seen in subsequent years. In Iran, the country's crude exports in December hit 1.137 million barrels per day, which is an increase of 42,000 barrels per day from November, and that's the highest in 2022, according to latest data obtained on the flow of higher shipments to China and Venezuela. Iranian oil exports hit this new high in the last 2 months of 2022, making a strong start to 2023, and despite U.S. sanctions, Tehran's oil exports have been limited since former U.S. President Mr. Donald Trump in 2018, while exports have now risen during the term of U.S. President Mr. Joe Biden, who had sought to revive the nuclear deal and hit the highest since 2019. The move has now lowered Chinese demand, and Russia's supply to China have been a major challenge to Iran crude oil export. Let's wrap up with crude oil prices on the international market as it begins the week with a decline as traders took profits from last week's rally and settled down to wait for market forecasts due to this week by OPEC and the International Energy Agency. U.S. West Texas Intermediate crude fell to sell at $79.42 per barrel with a price decline of 0.55%. Brent crude futures also experienced a downward price review of 0.69% to sell at $84.69 per barrel. Oil light is selling at $84.99 per barrel with an upsurge of 0.81%. And for the OPEC basket, crude oil dealers are offering $80.73 per barrel with an upward price margin of 3.20%.